Hi, everyone. Welcome to the Entrepreneur live stream. I was going to call it a podcast, but we're not really a podcast. You just find us on YouTube, and we stream every Tuesday at 1 p.m. Eastern and 12 p.m. Central, because Nate would kill me if I didn't mention it was 12 p.m. Central. And
And then
11
like
a.m.
10
Mountain, 10 a.m.
a.m. It just gets so confusing.
Let's just go from, Greenwich Mean Time all the way over. All right. So welcome. Today we're going to be talking about how to organize and use a limited liability company and really how that type of entity can really protect you. So let's just get right into it. Nate, what is a limited liability company?
Well, you nailed it with a limited liability company. It is a entity for a business, aka a company, that the owners actually have limited liability. But to explain what that actually means, limited liability is you can only lose what you put into the LLC. Applicable to both the owners, investors, passive owners, or even with the active management in an LLC, the manager or managing member.
So, it's funny. Okay, so you said that you can be protected, and the manager's protected, and everybody's protected. You put in whatever you want in there. But how does this differ from sole proprietorships, partnerships, corporations, other entity formations?
It really comes down to the flexibility and history. When we talk about corporations, everybody's heard about corporations. That's what's on the stock exchange. There's a lot of stringent rules around maintaining it. Not very flexible. Designated tax uses, very similar with partnerships, although partnerships, you can lose your limited liability. With an LLC, you get the flexibility of a partnership, but also the flexibility of tax considerations. There's actually not even a tax category for an LLC. Kind of weird. They're there for corporations. They're there for partnerships. LLCs, you actually get to choose how to be taxed.
Okay, let's get into that a little bit. What do you mean you can choose how you get taxed? Like, I choose not to be taxed. How about that?
I love it. Death and taxes, the only things that are like inevitable. So yeah, no, you've got to pay your taxes, but the question is, A, who pays them and how they get applied. Corporations, those entities, they pay their own taxes. It doesn't affect the owners unless there's dividends. Partnerships, they call it a pass-through taxation, meaning all the profits, all the losses, whatever it is, shows up on your individual tax return based on the partnership allocations. But something that's really interesting about an LLC, because you can have the LLC pick to be taxed as a partnership, pick to be taxed as a corporation. But if you have a single member, single owner, they call it a disregarded entity because they just throw out all the categories. And now your profits and losses actually show up directly on your personal tax return. That only applies really if you are the sole owner.
Yeah. You said something really interesting there, disregarded entity, or it's disregarded and it shows up in your tax return. What I found is that people oftentimes misinterpret what a disregarded entity is. They believe that, oh no, if I'm a single member LLC, then I am going to be subject to liability. And I'm going to, the LLC doesn't actually protect me. And that's not true, correct? Like, in other words, it's more like you will have passed through taxation on what's called a Form C with the IRS. as opposed to getting a K1 and doing a 1065 with the LLC. It does not mean that you will be subject to personal liability unless what happens?
In some states, it is more likely that a court, that a judge may, they call it piercing the corporate veil, even though it's not a corporation, and held the owner, the individual liable for what the LLC does.
Mm.
However, under the rules, it's still a distinct separate entity. It does come down to that piercing the corporate veil, which is, hey, are you treating the LLC, the business, like it's an actual business, not an extension of yourself?
Mm. Mm-hmm.
So that ends up being kind of the big consideration on, or can you be held liable? But I'll tell you as an example, I'm in Texas, and in Texas, at least, a lot of judges say, well, it's disregarded. You're treating it as your own extension because it's showing up on your own tax return, at least in Texas and some other states. It's better to add a second owner, even if it's like 0.5%, to create that multi-member and actually protect you a lot more. But in lots of states, it just doesn't matter at all.
Okay. All right. So that's good to know. So can that other person be a spouse, or does it have to be somebody else other than a spouse?
Ideally, they're not on your tax return. A great
Okay.
example is, I mean, if you have other businesses, other holding companies, any corporations, just throwing them on as a secondary owner actually 10x your protection, at least in Texas. I keep saying Texas because a lot of other states recognize rightfully an LLC is its own entity. It should be treated as its own business.
Mm.
When that happens, you're not personally responsible.
Okay. Okay. Interesting. All right. So let's talk about what you need to do to set up an LLC. What can somebody do to set up their own limited liability company?
You know what? Everybody should know and learn how to set up their own LLC.
Mm-hmm.
And even though I'm running a law firm, you know what? We do LLCs, but frankly, it's so easy that the viewers, you should be able to set up your own. It does start with figuring out what state you're going to form it in. And nowadays, kind of the big in vogue states are Delaware and Wyoming. It used to be Nevada, less so nowadays. But you can actually form your own LLC anywhere in America. What's required to start is you're filing a document with the Secretary of State in whatever state that may be. Sometimes they call it articles of organization. Some states call it a certificate of formation. It all means the same thing. It's just the official filing with the state.
You know, it's funny you mentioned Delaware and Wyoming. I agree with those. I have had great luck with South Dakota. I'm interested in hearing what your reasons are for not caring for Nevada anymore. I had my own reasons when I was practicing law to move away from Nevada, but I'm interested in hearing what your reasons are. And also, I do want to say to anybody out there that's in a state like California, for example, your choice of venue is irrelevant, because if you're in California, there's actually a law in California. And so you want to check if your particular state has a law like this. In California, there's a law that says if 30% of the owners live in, not 50%, 30% of the owners live in California, you must file in the state of California. Now, you can create an entity in South Dakota, Wyoming, Nevada, Delaware, wherever you want, but you have to register it as a foreign entity and pay the requisite taxes in the state of California. So a lot of these states have closed those loopholes, so be on the lookout for that. But back to Nevada.
I don't know. I love that you bring up California. I just brought up Texas. It's really important for people to understand there are 50 states, 50 different laws, both on the process of setting it up, how the taxes are treated, how well an LLC can be an asset protection vehicle or not. So you brought up a really good point. Nevada, it's literally a cost, well, generally say cost benefit, but it's a cost and cost issue. Nevada has phenomenal asset protection laws. They are strong on if you're operating properly through an LLC, you are still being protected. However, I'm actually licensed. I practice in Las Vegas for about a decade. And in that time frame, filing an entity went from $75 up to like $500. So it's just kind of night and day difference as they're jacking up the cost.
Yeah, it's funny. I had the same reasons. Those were my same reasons for moving away from Nevada. It was almost like I think it was around 2012 when Nevada as a state was suffering financially. Like we were still in the throes of the Great Recession. Might have been a little bit before 2012. And they snuck in this thing where you had to you had to get now you had to get, if you were going to file in Nevada, you had to get a business license. So they were like, no, our fees haven't changed. You just have to get a business license now.
It was hilarious when they did it. That just in and of itself hiked it up 200 to corporations. It used to be $125 per year to maintain it. Now they're $500 or $600 per year to maintain it. Where Wyoming literally copied the laws of Nevada. So they're great for asset protection, super simple in terms of setting them up. And an ongoing basis, the filing fees are $75 to get started. I think it's about $75 on an annual basis. And it may even be less than that. So it's got all of the Nevada protections and benefits, just not the cost.
Yeah, no, and see, that's what we want. So okay, so we're protected. We have flexible taxation here, and we can do this ourselves, right? How does one do it themselves if they want to form an LLC? Where do they go? How do they do it?
Go to the Secretary of State of whatever state that you're organizing in. They will have instructions and the document that you literally fill out, that articles of organization, certificate of formation. It's always the same. What are you going to call the LLC? What's the address of the LLC? Who's the management? Generally doesn't include who the owners are, but very important, who is the registered agent? And let me throw that question right back to you. What does registered agent actually mean, and why do people need to include that?
Oh, it's like you read my mind. That was the next thing I was going to bring up. So when you file outside of your state, if you don't have an address within that state, or you cannot be your own what's called registered agent, you must, if you're going to take advantage of the laws and the ability to file within a state, then you must have a presence in that state. And this is establishing yourself in that state. And so there are these entities that exist that are called registered agents that will play that role for you, that will provide that address for you. For example, if you get served because you're being sued in whatever state you're formed in, they will take service for you. They'll accept, in some cases, accept other mail. But the most important part is that is the name, the address that goes on your documents when you register your LLC as that registered agent. And honestly, it's not expensive. You can get it as cheap as $49 a year. I've seen some as expensive as $159 a year, but you can get it as cheap as $49 a year. And it also depends on what state you're in.
I would say it seems like the average is about $100 to hire a commercial registered agent. Some states, they call it a statutory agent. All states have some requirement of that. And it's kind of ridiculous to have, but you nailed it with it's statutorily, it's legally required. And anybody that sues the company, that's who and where they serve them.
Mhm, mhm, mhm. You know, it's funny. Okay, so you go to the Secretary of State's website, you can figure it all out there. They'll lead you through it. It's honestly, everybody, it's not that hard. You do not need a service to do this for you. If you just Google Secretary of State and that state's name, obviously, you will now I will say this. Some Secretary of State's websites are complicated because the Secretary of State doesn't just take care of business registration filings, they take care of a lot of different things. And it depends on the state of all the things that they take care of. That's not relevant. So you might have to dig around on that website a little bit to really figure out what you need to do. But so many states now allow you to file for these LLCs right online. You do not need to pay an entity to do that. And I'm going to give ourselves a little plug. If you actually need some additional paperwork, there's something we're going to come talk about here. It's called an operating agreement. We're going to get to this in a few minutes, but this is not part of the form that you fill out with the Secretary of State. What you fill out with the Secretary of State is called the Articles of Organization. And you do that, and sometimes you'll have a registry, but it's usually just an Articles of Organization. But what you need when you go to the bank to get a bank account and start collecting money for your business is an operating agreement. And the operating agreement is your instructions on how you're going to run. It's literally what it's named. How does this company agree to operate? So we have one for you. It's totally free. You can go to, do you have the QR code, Nate, by any chance? Oh, there's the operating agreement.
That is yes, this is a template that will be available for you. I'll throw the URL in chat.
Oh, perfect. Sorry, URL. So the URL will be in chat and you can download that operating agreement. And we're going to talk about what the operating agreement really does. Okay, but before we get to that, so you have to file. And you fill out the paperwork. It's pretty simple. It's pretty straightforward. You pay your filing fees. You get your registered agent. You do this through the Secretary of State's website. But here are some of the hard questions, Nate. Let's say I'm an owner of an LLC and I want to either take in investors or partners, or I want to give my employees a piece of my LLC. But I don't want my employees, my investors, my partners who aren't working as hard as me to have the same rights as I do or the same interest as I do. How can I give them a different interest than what I have in my LLC? Is that possible?
It's definitely possible. And there's a huge difference between, they call it a single member LLC, where you're almost making an agreement with yourself. But best practices is to always have an operating agreement. Then it gets far more complicated as soon as you start bringing in partners, investors, other members, your employees. That's where this operating agreements goes from being 10 pages to 20, 30 pages, because it defines things such as who can vote on what, when those approvals are actually needed, and whoever is controlling that LLC, that managing member that was referring to, what can they do without asking for, hey, do I have the right, the authority, or the power to do these things? It's all super well defined within the operating agreement. And then when it comes to investors, the most important thing is, of course, what do they get from the profits that are coming in?
Yeah.
So it's
investors do
kind of
about that.
Yeah, they really kind of do. And I guess when it comes to investors, it's like that risk and reward and what's in it for me.
Right. Hey, it brings me to an interesting question. And I've had this happen before, when a client might have an overly simple operating agreement or they don't have an operating agreement, or the operating agreement isn't signed, or something to the fact, right? Something that makes it, that complicates life, and a dispute comes up. Where do owners find solace? How do they solve this problem if they don't have an operating agreement, or the operating agreement is silent on a matter? How do they solve that?
Okay, the good old fashioned vanilla ice baby just came to mind. If there is a problem, yo, I'll
Oh
solve
my
it.
God, why? That's so great. Why?
No,
We
I
stop,
mean
we
often
collaborate, and you listen.
there you go. No, I mean generally and hopefully the dispute terms are discussed within the operating agreement itself. Are you required to go to court, or an alternative, the court like arbitration or mediation? Can we just go and work stuff out? Oftentimes that's within the operating agreement. It should be within the operating agreement. You're trying to deal with as many issues and problems as you can before it becomes an issue. But if that doesn't work, you got to talk to the attorneys. I mean, it's that's we're here to help. Necessary evil. We don't want to see disputes happen, and we try to deal with that beforehand. That's where, actually hiring an attorney to help guide the partnership, guide you to how you're going to structure this, can be very important. I say that if you're doing it for yourself, that single member LLC, far simpler. And this is where we really want to emphasize, you really don't need to hire an attorney unless you have partners. Then you definitely need to find an attorney.
Well, look, not everybody's going to find an attorney. They're too cheap, right? Or they just don't have the funds to do it right now. I get that, right? I mean, even as somebody who bangs the drum of, no, you better use a lawyer, because I dealt with plenty of business partnerships that imploded because people didn't use a lawyer ahead of time. But I also am curious as to, because I am so rusty at this stuff in a lot of ways in terms of the law and the LLC laws in certain states. But if the operating agreement is silent to something, does the state laws, I know some do, but I don't know about all of them, do some of the state laws speak to what should happen in the absence of an operating agreement?
To the extent that I know, because we've had to look at quite a few, people just sign up for LLCs and never even think about it. Every state I'm aware of has laws, has regulations of how an LLC works, management, voting, and everything. But some states are like, well, you just have to vote on everything material. What does that really mean? Well, you can go to court and fight about it. Yeah, but that's where this operating agreement solves the problems before it becomes a problem.
Yeah. Solve a problem before it becomes a problem. Absolutely. What I also call an operating agreement is negotiating the divorce in advance. So
yes, planning,
because they usually happen.
Strategy.
It's funny because whenever you go into a business relationship, I find you go in and it is your honeymoon period, right? You love each other. You want to be successful. You want to be successful together. But by and large, business relationships are going to break up, and they might not necessarily break up because you had an issue with each other. They might break up because somebody gets sick, or somebody dies, or somebody just wants to do something different in life. So I always say negotiate the divorce before it's too late. Like, have it figured out so that the transition is so much easier.
So my absolute favorite viewer ever, SoCal Buff, he's really emphasizing negotiate the exit early. This is a prenup.
Oh my gosh, I
what's
didn't even
gonna
see
happen.
the comments. I just saw them now. That's great.
Yeah, and
Yeah.
if anybody, viewers, if you have questions or discussion points that you want us to dive into more, you got two pros. Throw it in chat. We really want to be responsive to make sure we're covering what's important to you.
Yeah, for sure. Please. We love questions. That way we can get to the end of the hour too. Let's be honest.
I don't know. I feel like this is one of those things that, I mean, we've all both taken years of education, focused on this for many more years beyond that. I think I can talk about this for days.
We probably could. And that's the funny thing is we could talk about this for days. It's always those questions that you don't know. That's why I love getting questions from the audience, because I don't know what you don't know out there. So, Nate and I have been involved in LLCs since we started practicing law. So, and actually even before that, when I was, in real estate development. So absolutely, we could talk all day, but we need to know what you need to know in order to be more successful. So,
you
okay.
know what? I'd like to play a little game with you because
Okay.
honestly,
I love games.
we use words and terms that, frankly, a lot of the viewers, a lot of just kind of normal non-business people don't actually know what they mean.
Sure.
So I'm just going to name some things. I want to hear you define it. Let's go.
Okay. All right.
Managing member.
The managing member is a person who is a actual owner member of the company, but is also, for lack of a better term, the CEO in charge. They're the ones who are doing the day-to-day operations and making sure that the will of the LLC, which is in the operating agreement, and the purpose of the LLC is being carried out.
All right. How about a manager?
Well, a manager isn't necessarily a managing member. They're not necessarily an owner. They might just be a hired employee that is like a CEO that doesn't own any stock in a corporation.
For somebody that's either a member or a manager, does it actually have to be a person?
No. Oh my God, that's such a great question. You've brought us into a whole new area. Now we're definitely going to get to the top of the hour. So, or the bottom of the hour, however you look at it. No, the manager can be another company. It can be a trust. It can be, it can be, and usually the way we always set up LLCs, because we were usually setting up LLCs for complicated syndication structures, there would be sometimes as many as 3 or 4 LLCs. I mean, we could really get into this on this level and in this regard. So yeah, I oftentimes had an LLC that was the managing member or just the manager, either or, of the LLC where all the investors were, et cetera.
Okay, what about a holding company? I get so many questions about holding companies. I do a lot of kind of educational groups. I get more questions about what a holding company is and how it's used, literally more than anything. So please explain what a holding company means.
So I almost wish, you know what? I wish this streaming software had like a little way that I could like do a drawing for everybody. I might figure that out. Okay, I'm going to keep talking a little bit, and then Nate's going to talk, and then I'm going to pull up a drawing. Okay. So when we talk about a holding company, we're talking about a company that holds multiple assets. And generally speaking, those assets are other companies. They're not hard assets like a piece of real estate. They're not hard assets like equipment or inventory or intellectual property. Those assets that holding company holds are other LLCs or other entities. And generally speaking, the holding company is the only member of the entities which it holds. So so I'm going to draw with my hands and then I'll bring up a chart. But so you have a entity, an LLC, we'll call this the holdee. and this is an asset LLC. The purpose of this LLC is to hold an asset, and that's it. And it's a liability protection entity that holds one asset. So let's just say that asset is an apartment building, because this is very typical. So the asset is the apartment building. It's held in LLC1 or property LLC. So property LLC holds the property. But then property LLC is owned by holding company. Holding company has all the investors. And then holding company is managed by what? Another LLC, management LLC. So you have management LLC that manages holding company LLC, which is where all the investors invest. And then holding company LLC owns various LLCs that each own one single asset. These little LLCs that own one single asset, you might also hear them referred to as special purpose entities or special purpose vehicles, because their special purpose is to do one thing and one thing only, and that's to hold an asset. Ta-da!
Love it. The way you explained it, it sounds like a fund to me. Investors are all coming into the holding company. That fund, which is buying the individual assets through a SPE, single purpose entity, or an SPV. But I do want to ask you about SPVs, because like people keep hearing SPV, they don't really understand what it means. Can you describe it a little more?
A special purpose vehicle usually just does one very simple thing. That's it. Like their simple purpose is to buy a particular asset or to hold on to a particular asset, and that's it. Sometimes the special purpose entity or special purpose vehicle will already have that asset identified. Sometimes it won't. And so the question becomes, what kind of guidelines does that special purpose entity have in order to be successful in acquiring an asset?
All right. And so SPVs, it does come up in another area. So I do want to bring it up. Not a lot
you
of people
go ahead.
really
I'm sorry. I missed it.
No, that you were spot on, because if you have a holding company, you're buying multiple assets, that special purpose vehicle provides that protection. Now, when it comes to crowdfunding, crowdfunding lawyer here, SPVs are oftentimes used for a separate purpose of, if you're running a crowdfunding campaign, you may literally have hundreds to thousands of investors, and you may not want to show thousands of investors on your operating agreement, on that ownership table, sometimes called a cap table. So by having the investors come into that SPV, that special purpose vehicle, it will show up as a single line item on that ownership table. So when the management, when the founders go to find, hey, I'm looking to get some financing, you're not scaring the banks. Or if you want to work with a VC, a venture capitalist, they don't want to see they're one of thousands. They want to see they're one of 4. So that's a different use of SPVs.
Look at I just drew up for us.
All right. You'll have to add it, or I really want to see, like, I do good stick figures, the big round head. That's my drawing artistic capability. So let's see what you got.
Oh, I shared it. I don't know if it's showing on the screen. Is it showing? I think you have to share it on your end.
Yeah, it has to pop up first. It was not shared properly. Well, why don't you figure that out, and let me just share something with everybody, so you'll have about a minute to figure out how to make this work. We talked about, Jillian talked about, we want to make it as easy as possible for you to set up your own LLC without an attorney. And if you're doing this for yourself, that single member, single owner LLC, that's where it is that simple operating agreement, So here's just a form that literally covers everything that you need to set up your own LLC operating agreement. So, and to give you the, hey, here's a nice, easy QR code. I did put together a little ad here. So at the end of it, there's going to be a QR code so that you can download your own operating agreement, some additional information. But you got about 30 seconds here. Good luck, Jillian.
Great empire begins with a blueprint. What's yours? It then starts with a firm foundation and vision. As you grow, your business becomes more than just an idea. It becomes a company. With the right mindset and knowledge, it grows into an empire, your fortress of success. At Entrepreneur, we provide the education, insights, and strategy for you to build your empire. From legal and business to marketing strategies, we're here to help. Join us on YouTube and get our newsletter to start building your empire today. Entrepreneur, here's where business grows. Subscribe now.
I'm really proud of that thing. But the awesome. Important part to get your free, no obligation, hey, this is just so that we can help. Go to this website, check out the QR code, and you'll be able to just download it. So thank you, and you're welcome. And Jillian, we have now figured out how to add your pretty picture. Oh no, where are you, pretty picture? There we go.
Yeah. So here we have you know, we have the SPV down here. We have our asset down here, but we have some things up here that we actually didn't even discuss all that much. First, we did talk about the investors. The investors put money in, and hopefully they get more money out than they put in. So this is our LLC where our investors invest. And then our founders LLC, and you'll see here, we've created two different LLCs. So if you're looking at doing a holding company or a fund or something like that, you might want to consider two different LLCs. And the reason is because of the taxation. One is going to have ordinary income for things, and then the other one you want to make sure doesn't get taxed as ordinary income, because ordinary income is taxed at a higher rate, generally speaking, than capital gains. So if you're thinking you're going to make money on both ends of the equation, then you don't want to take in all your money into a ordinary income situation and then not have the benefit of being charged capital gains or the lower tax rate on the capital gains, because the IRS counts it as ordinary income. So we have a founders LLC, and this is where you would get your equity interest, hopefully being taxed as capital gains. And over here we have your asset management LLC, and this is for the work that you do and thus may be taxed as ordinary income. So look at all these LLCs.
Now, if the founder, and we'll just pretend like there's a single founder, he has his own holding company, but it's his personal holding company. Would that founders LLC, would his personal holding company be the right place to own the founder's part of the fund entity?
Oh, absolutely not. No. I would say where should his holding company act as the fund? No. Is that what you're asking? I might be.
No. Should his holding company serve as, looking at your pretty picture? I mean, if you just created it that fast, you're amazing. The founders LLC.
Just to be clear, I did not.
You should have claimed it right there.
I know. Yeah, I know. So,
I know this stuff so well. Bam. There you go.
Yeah. So okay. So I think I understand what you're saying. You can correct me if I'm wrong, but you know, if you're going to hold assets and just hold assets for the money that the assets are making, not for the work that you're doing, and you have this asset management LLC that's taking in those fees for the work that you're doing, then absolutely sure. Because here's the thing, I always feel like in a lot of ways, despite the fact that we're talking about these structures with multiple LLCs and et cetera, I always feel less is more. The least amount you can organize and use and structure, the better off you are. Because the problem with having multiple LLCs is that you have to file a tax return for each and every one of them. That drives up your cost. You have to file you have to file with the states and pay the filing fees for those states, and then pay those filing fees every single year. So again, we're talking about costs and just the aggravation of doing those things, right? Just who wants to be doing that kind of stuff. And then also just keeping track of it and making sure that you don't have any commingling of funds or anything like that. So to me, the least amount of LLCs you can have while having the most amount of, or the ideal or optimal amount of protection is really what you want to be going for.
Okay, I have one of the most important questions of the day for you. What do LLCs and superheroes have in common?
Oh, I don't know. What?
They both provide limited exposure to danger.
Nice. I like it. I like it a lot.
There's the bad dad joke of the day.
Yeah, okay. You gotta have them sometimes. All right. So let's talk. I have another slide that we can take a look at, but let's build it up for a second here and talk about it. A lot of times what we get asked is, what if I have people that are from outside of the country? Can they invest in my LLC? And I'm gonna punt that to you first. And ask you, can outside investors, foreign investors, invest in your LLC?
I am impressed how quickly you updated this to adding foreign investors, and the answer is yes. And you know what? Frankly,
I know.
She's amazing. It's like magic.
I have a chip in my head where I can. Exactly.
Impressive. But no, I love that this is the example that you just provided, but now you've added that one additional level of bringing in foreign investors. Now, the issue being, just so that everybody understands, that foreign investors have certain additional tax issues. If a foreign investor invests directly into the fund entity, there is generally, they call it a tax withholding requirement, where of all the dividends and distributions that go back to that foreign investor, about 35%, it's a little bit more than that, of those profits has to go to the IRS. The IRS holds on to it. The foreign investor can file taxes in the US and in their country, and usually they'll offset one another. But now all of a sudden they've got to file another tax return in the US. Well, we kind of suggest to people to use this blocker entity that is taxed as a C corporation, which kind of simplifies things in terms of the foreign investor doesn't have that tax withholding. They just do the same, filing the tax return without withholdings for that C corporation. So it does really simplify things when you're bringing on non-US based investors, even Canadians.
Yeah,
I know it's
and
our
yeah,
neighbors.
and the thing is, no one wants 35% of their money being withheld by the US government. No one does. So
I do. Somebody's got to pay for the hurricane damage that's happening right now, and if it comes from foreign investors, all the better. So,
hey, you know what? I didn't know where that was going, but it went right in the right direction. So So, yeah, no, look, yes, it's got to, we all have to pay taxes. Lord knows I pay taxes. I know you pay taxes. We all have to pay taxes, but nobody wants to pay more than their fair share. And everybody wants to be able to take care of the tax code as much as possible. And so that's what this structure allows your foreign investors to do. It minimizes their US tax exposure. Again, no one wants to pay 30% tax, or 35. Is it 35% now, or is it 30%
It's
withholding?
it's more than 35%. I think it's like 36.5%. It's a large
So
percentage. It's kind of like the top
yeah.
tax rate is withheld, but then as I was suggesting, that foreign investor can still file a tax return in the US. And the US has they call it a tax treaty with the vast majority of countries, unless you're from North Korea or someplace. Most countries have a tax treaty where you don't pay taxes twice. The taxes of your home country and the IRS, the US tax guys, they offset one another. So you really end up paying the higher tax rate between the two.
Oh, okay. Okay, that's fair. So, okay. So with that being said, though, it's so funny. I don't know if I really understood those other tax treaties, but what I do know is that we do have a special tax treaty with Canada. And that special tax treaty allows Canadian citizens to invest in not limited liability companies, even though I believe that was the intended purpose, but that's not how it's written. So that's not how it's applied, unfortunately. But it allows Canadian citizens to invest in partnerships, limited partnerships in the United States, and not be subject to that 36%, whatever it is, 37% withholding. They're not subject to it, but that only applies to Canadian citizens, and it only applies to partnerships.
You brought up really important points. We do work a lot with Canadians, both just doing business, creating investments, or being investors. Canada doesn't have LLCs. Frankly, if you are Canadian, ignore everything we've said for the last 15 minutes because it doesn't apply to you. Canada doesn't recognize LLCs, but they do recognize limited partnerships. So a Canadian can set up or invest into a limited partnership or a corporation. And if you're trying to invest or be a partner in an LLC that has been set up already to make the investment, no problem. That's exactly why you use that blocker corporation. Still allows the Canadian investors to invest into US LLC syndications.
Yeah, and by the way, I'm going to tell you right now, do not under any circumstances try to do this entity structure on your own. Hire a lawyer. I know we started off this particular stream with talking about how easy it is to go form your own LLC, and we're going to give you this free operating agreement, and you can do it yourself and you don't have to spend a lot of money to do it. But I'm going to tell you right now, if you're going to do a complex structure where you're going to have more than one LLC, or you're taking in any foreign investors, you must hire a lawyer. I cannot say that loud enough, because you'll screw it up. You'll screw it up. I don't mean to come down on you fine folks out in the audience, the thousands of you that are listening now, but it's just inevitable. It took me years to figure this out. So
inevitable, or if you're working with partners, if you're raising capital from investors, frankly, if you're borrowing money, you have to make sure that you are protected and you're protecting your investors. You have your breakup terms with your partners. All of this really, it all comes down to that operating agreement that we talked about. Yeah, we're sharing an operating agreement template that is very specifically for single owner LLCs. because the risk in terms, it's always the same. Again, you're just making a partner with yourself. All right, we've got a question that brought up, and thank you so much to Jervin. Is there such thing as an S Corp LLC?
Oh, I mean, yeah, there's, I didn't know if, I didn't realize you were asking me. I thought you were going to ask it and then answer it. Sorry. And I actually have a question for you. Yeah, absolutely. You can take that tax election. Like we were talking at the beginning, you've taken a tax election of being a C Corp or an S Corp or a partnership taxation. All of those things. You can do any one of those things. Now, the important thing you want to talk to somebody about this, like preferably actually a CPA over an attorney in this matter, unless they're a specific tax attorney, because you have to make those elections at very specific times or else you can't make the election. Now, as far as what the consequences are of making that particular election, I'm actually going to defer to Nate on this. I'm not sure I know what the implications are of making an S Corp tax election.
You know what? If it is a single owner LLC, I love adding the S Corp election because of how the IRS views single owner LLCs. With the IRS, they call these LLCs, hey, you own 100% of it. We're going to disregard that LLC. You're reporting your profits and losses directly on your tax return. And because they're disregarded, the IRS will treat those profits as ordinary income. With ordinary income, you're paying Social Security and Medicaid or Medicare, whatever it is. Now, if you have the LLC taxed as an S corporation, you are required to claim a reasonable salary, but you can have passive profits above that, and you don't pay Social Security and Medicaid on the, I don't know, maybe it's Medicare, on the additional, the passive ownership allocation. And talk to 1,000 CPAs and 1,000 attorneys, you're going to get 2,000 answers. Well, how much of the profits should I take as ordinary income, as that salary? Some really aggressive attorneys or CPAs will say, as long as it's 25%, on average, I would say most attorneys or CPAs, and I'm saying this, these are third parties. I'm staying out of this. I'm not making recommendations, but a lot of them will say, as long as you're taking about 50% of your profit and calling it a salary. But if you have an amazing business, your profit is $1 million per year, and you're spending a limited amount of time on your operations, you have other things going on. That implies that maybe for the time spent, you shouldn't be having a huge salary, but you should have a large amount of passive income saving that Social Security payment. So that's what I would say or respond on that. But yeah, I love doing S Corp LLCs for the single owners for exactly that reason.
That was great advice. That was awesome. That was way more in depth than I could have ever done. So fantastic. Thanks. All right. So what would somebody do with intellectual property in an L? What's that?
What would you do for a Klondike bar?
Oh, I don't know. Klondike bars are pretty good. No, don't test that.
Do they have them in Puerto Rico?
I'm sure they do. You know, though, I'll say this: ice cream in Puerto Rico is outrageously expensive. So I don't buy. It's not that. That's not the reason I don't buy a whole lot of it, but it is outrageously expensive here. I don't buy a lot of it because if it's here, I eat it. So that's not good for my waistline. So, but let's talk about intellectual property for a second. Does intellectual property, if you have like trademarks, copyrights, etc., what should we be doing with our intellectual property when we have an LLC? Do we treat that any differently?
Personally, I have a strong preference for there to be a distinct LLC that owns all of the IP, the trademarks, the patents, the brand value. Reason
Yeah.
being, especially if, let's think you're growing your business, maybe you have multiple business locations, especially if you're growing your retail empire.
Mm-hmm.
Well, you can
Mhm.
have that one LLC be licensing, creating royalties payments, creating licensing payments from that LLC, from your own entities. That's creating more passive income that will roll up to you. Plus, similar to having that holding company, there's not a lot of operations when it comes to licensing intellectual property. So it does add that additional level of protection. I mean, it's, as attorneys, more levels and layers of entities, more protection. But at least when it comes to intellectual property, that IP, kind of nice to have it segregated. I'll also throw this out because it comes up a lot with the more complicated structures. And as businesses grow, you may also have a separate LLC for your employees. That can make things a lot easier from a business accounting and tax consideration, because now you can charge to the different businesses that you're operating, especially if you have investors in any of them, the reasonable allocation of the time and expense of the employees to that business, rather than that business having to hire everybody. Even though that employee may be helping different locations, they may be helping different LLCs.
Wow. That was actually a great answer. I for one, really appreciate it because I would never even, definitely the intellectual property I would consider, but the employees, that's just a whole different spin on how you can be successful. So we're coming to the end here, guys. If you're watching out there and you have a question, now is the time to ask. You don't have to limit it to the subject of limited liability companies, but those would be preferred questions, considering that's the subject we're on. Otherwise, we are here every week on Tuesday at 1 p.m. Eastern time, noon Central time, and then, 11 Mountain time and 10 Pacific, those other places.
And very importantly,
Great.
Oh no. Well, there was that. I'm going to go ahead and zip to the end, because if you do want to get updates about what we're talking about, what's going on, plus just kind of some up-to-date information, suggestions, how to start your business, how to scale your business, and how to protect you, get the free single member owner operating agreement for your LLC, but also we'll keep you up to date on everything that's going on.
Yeah, and actually I want to promote a little something before we go. I want to promote our next week, when we get together next week. If you come to the live stream next week and you have what we consider the best question during the live stream, that lucky commenter, questioner, whatever you want to call it, is going to receive a free Extraordinary Life Planner. These are quarterly planners. I made them myself.
I literally
designed them myself. Yeah, and I love this planner because I made it. But but I mean, you can buy this planner on Amazon. I don't make any money on Amazon if you buy it, to be perfectly frank with you. But I will give you one for free if you have the best question or comment next week. So join us next week, same place, same time, same day of the week. And you could be the proud recipient of a quarterly planner. And honestly, it's October 1st. So it's the beginning of the quarter. So you're only going to miss like a week of the quarter in your planning activities.
Is this part of the best life ever?
Last Life Ever. Yeah. See,
Last Life Ever. Sorry.
extraordinary life planner presented by Last Life Ever. That's my other company. We'll talk about them on another occasion.
I really want to hear a lot more of that. Yeah, as well as you got a lot of, entrepreneurial training programs that.
Yeah. We're
learn more about
guys.
that.
You got to stick with us. We just started this. This is like what, our 4th week? Maybe?
If that. I mean, it's.
If that.
But
this is our 4th week. So yeah, you got to stick with us. It's only going to get better.
we really are here. I know at least my passion is entrepreneurship. I love to help people reach their goals, to get their ideas, make a real business engine from that napkin idea. So that's the reason I'm doing it. And I know you are as well.
Yeah, absolutely. Absolutely. Well, thank you everybody for joining us. I'm Jillian Sidoti. That's Nate Dodson. This has been Entrepreneur, and we'll see you next time.
See you again.